What's up everybody? Welcome to the Stocks channel. My name is Cory and today we continue to see that volatile sector rotation and we finally got through quad witching. What should we expect going into next week in the stock market? First up, let's take a look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, first up, let's take a look at an update on the cycle analysis, and remember that we were expecting a cycle low in the middle of June here, and that landed right around 616. It did look like that cycle low extended a couple days because of quad witching, which is completely normal and completely expected. So the one thing to take note of these cycles is they are very large cycles and they go through large periods of time, and we're now coming out of a potential cycle low. So what we could be seeing is a very weak spot in the market, but it could also be the birth of a brand new bull cycle. So coming out of the middle to the end of June, we could be seeing a very strong rally in the stock market. Now, one thing to note is coming out of the middle to the end of June, if we don't see a strong rally and we can't make a brand new all-time high, that will be very telling that we could be seeing a very weak market and we could actually be going into a bear market. So these next few weeks are going to be very important according to the cycle analysis, because if we are going to see strength in the market, we should start to see the strength going into the very early stages of July. So remember, the price target on the SPX is still up here at 43.06. And that is basically SPY levels of $430. So the cycle analysis is not something to put too much weight on. We still need to follow the price action, but it is important to know that we could be coming out of a very large weak point in the market, and we could start seeing a lot more strength coming in the next couple of weeks here. All right, so jumping over to the SPY ETF, we can see that we did have a big drop today, going down 1.67%, and we closed right on top of that support level at the 50 EMA. Remember, I said if we get below SPY 420, we're going to see a lot more weakness in the stock market. And today, not only did we gap down below SPY 420, but we also saw that big sell-off and we did land right around 415. So 415 can be a very strong support level because we are in a bull market on the 50 EMA, and the 20 simple moving average and the 50 EMA are always going to be very strong support levels in a bull market. However, if we start breaking below 415, that will be a warning sign that we could be going into a bear market. Remember, in a bear market, we're looking for the gap closes below at $411 and $400, and we will see a lot of weakness in the stock market if we do see SPY getting below 415. Now, the good news for the bulls is that we did gap down, and that did leave a gap above that won't get filled until we get back above 419. So right now, I like to call this the battle of the gaps. Will SPY fill the gap at 411, or will SPY fill the gap at 419? Which gap will get filled first is going to be the story going into next week. We're sitting right on top of a strong support level in a bull market, and we do have a gap above that won't fill until we get back to 419. So even in the event that we do see a bear market, we're more than likely going to get one of those ABCs down. So this could be an ABC move down where we went down in wave A, we're going to bounce and fill the gap in wave B, and then we could come back down in wave C to fill the gap at 411 or possibly overextend and go fill the gap at 400. So right now it does look like we could be due for a relief rally. We have a gap above and we had a huge sell off from the all-time highs. We're now down just under 2.5%. So that is a sizable pullback, and if we are going into a deeper correction, we would expect to see somewhere around a 5 to 6% pullback, and a normal pullback would be somewhere between 1.5 to 3.5%. So we've met the criteria for a normal pullback. The question is, are we going to break down and continue to go lower? We can see the moving averages are starting to cross over, so we're losing the full bull trend, and now we have to watch the price action very closely. So going back to the price action below SPY 420, we need to be a lot more defensive. 420 was a very critical level, and below 420 we had another critical level at 417, and we're currently trading below both of those critical supports. So those support levels are now resistance, which means the bears do have the edge, and they can continue to drive this market lower if the bulls cannot get back above those resistance levels. So critical resistance is now actually the previous critical support, which is 417 and 420. The 20 simple moving average is also going to be right around that $420 range. So watch the gap above at 419 and watch the gap below at 411, and do understand that we did close right on top of critical support. And it's also important to note, because we did lose the bullish trend, there's going to be no trend advantage in either direction. So the bulls and the bears alike don't have the advantage of a trend, and that typically means you're going to get a lot more of a choppy sideways market, and we could continue to just chop around the zone until we see a more clear direction in this market. So watch the critical levels of resistance at 417 and 420 and the critical levels of support at 415 and 411. If we break down below 411, there's almost no doubt that we're going to fill the gap down here at 400. On the NASDAQ 100 triple Qs, we dropped 0.78% today, and the NASDAQ 100 did hold up very strongly today. Remember that we're more than likely in a sector rotation, and it does look like we're continuing to see strength in the tech sector. As you can tell from the triple Qs, we have a much different picture. The price action is currently trading above a 5 EMA, and we still have a very strong full bull trend. So the NASDAQ 100 is showing that the tech sector is still very strong, and even in a volatile day like today, we did see selling, but we didn't break through a single critical support level. Remember, the critical support levels on the triple Qs are 342 and 339, and we really need to start breaking below 339 to start seeing weakness. So the triple Qs still look very strong, and they still have the benefit of that strong bull trend. So there is a ton of support levels on the triple Qs before we start to see weakness, and we didn't see any of those support levels violated with today's price action. We still have critical resistance above just at 346, and above that level we could be going into the 350s. So on the triple Qs, watch 339 very closely, and below that we would be looking for support at 337. Once we start breaking below these critical support levels, we're going to start thinking about critical support at the 50 EMA at 333, and below that you're looking for the gap fills at 323 and 315. But right now that's looking way too far ahead because we haven't seen a single breakdown in the triple Qs just yet. That doesn't mean it can't happen, but remember, quad witching is mostly about sector rotation, and it sure does look like the tech and growth sectors are doing very well. In the Dow Jones, we see a completely different story, and we see the Dow Jones getting absolutely obliterated today, going down 1.68%. The Dow Jones now has a gap above that won't fill until we get back up to 336.6, and the gap below is down here at 331.6. So again, we're in a situation where the price action is stuck between two gaps, and it's going to be a battle of which gap gets filled first. More than likely, the Dow Jones is getting way too far oversold, and it's due for a relief rally. So watch the critical resistance above at 336.7 and the 50 EMA at 339.7. It's also very likely we do fill the gap below because we're right at that gap, and it doesn't take a lot for the bears to push down into that level. So the critical support level is now 331.6. You can see the Dow Jones has no trend for the bulls or the bears, so continue to see choppy price action until we can establish a bearish trend or a bullish trend in the Dow Jones. On the Russell 2000, we did drop 2.27% today, and we did close the gap below that was at 223.7. The Russell 2000 closed below the 50 EMA, and the next critical support level is sitting here right around 220.5. Remember, closing below the 50 EMA is never a good signal, and it does mean that the Russell 2000 is likely rolling over. However, watch the critical support because we could still bounce from here, and just like I said with the Dow Jones, we could be due for a relief rally and an oversold bounce. So the critical support for the Russell 2000 is now 220.5 and down here around 215. Critical resistance above will be 224.5 and right up here at 227. On the ARKK ETF, we actually closed in the green today, going up 0.34%. This is more evidence that we're seeing money rotating into growth and tech stocks, even though we're seeing massive selling in the Dow Jones and the other sectors. So this is a very telling situation where we see the price action in the growth stocks actually going higher on a day the rest of the stock market was going much lower. So like I said last night, follow the money and pay very close attention to which sectors are performing the best. So on ARKK, we still have resistance above at 120 and the resistance trend line right around 121.7, and above that we're looking for resistance right around 128. Downside support levels are still 115, 112.8, and then below 112.8 it will look like ARKK is starting to roll over, and you're looking for support around 109 and 106. But right now you can tell from the price action and the trend in ARKK that it is starting to develop a bullish trend, and it is having bullish price action. So pay very close attention to this because the sector rotation is telling you everything you need to know about which stocks are going to be the top performers going into the next quarter. On the VIX, we did have a huge spike in fear today with the VIX going up 16.7%, and the VIX did close above 20 at 20.71. Remember, 20 was our line in the sand for a high volatility, more of a correction sell-off, and that's exactly what we saw today. We saw the VIX breaking above 20, and we saw a lot of selling in a lot of the sectors and a lot of the indices. The question is the VIX going to continue to go higher from here, which will signal a deeper stock market correction, or are we going to see the VIX cooling off a little bit and trying to get back below 19? So remember, the VIX above 20, you need to be very cautious and you need to prepare for a deeper correction. Right now, that's the landscape that we're in, so remain cautious and be disciplined. This is not the time to be taking on too much risk until we see what happens in the next couple of weeks here. On the US dollar, we continue to see a lot of strength, and we see the third day in a row of a very parabolic move. This rally is very likely not sustainable, but it is putting a lot of pressure on gold and silver. On gold, we see more selling because of the strength in the dollar, and we're right at that critical support level at 1761. Below 1761, we would be looking for support down here at 1686, but this should be a fairly strong support level. So look for this level to possibly hold up with the next price target up here around 1829. On silver, we also saw a lot of selling because of the strength in the dollar, and we also closed right on top of support at 25.79. Below this support, we'll be looking for support right around 25.1, but the price target above at this level will be 26.5 and $27. On Bitcoin, we're currently down over 6.5%, and Bitcoin is breaking through all of those critical support levels that I gave you. Remember, Bitcoin needed to hold up above 39,000 to try to get back into a bull trend, and it needed to stay above critical support at 37,000. Bitcoin is currently breaking back down through the $35,500 level, which means it could easily come back down to support at 30,000 or 27,000. Resistance is now above at 37,000 and 39,000, and Bitcoin is in a bear market because it never broke back above the 50 EMA. So just like I always say, wait for Bitcoin to get back above 43,000 before you try to get overly bullish. At these levels, Bitcoin can continue to go much lower, so if you're accumulating for the long term, you're probably okay, but if you're trying to trade Bitcoin in a bull market, it's just not the right time because we don't have any bullish trending or any bullish price action. So be patient and watch those critical support levels down here at $30,000 and $27,000. On Amazon, we were relatively flat for the day, going down 0.07%, which is completely expected after this monster bull run that we've seen Amazon on. We closed way above the upper Bollinger Band yesterday, and we're right at that resistance level at 3,500, but we still see a lot of buying volume on Amazon, and it still looks very strong. Remember, it's in a full bull trend, and we now have support below at 3458 and 3400. It's very likely that Amazon is breaking out and going into a very strong bull rally, but it's also getting a little far overextended, and it's due for a little bit of a pullback. So continue to watch these support levels, and if we do break out over 3,500, the next price target is just above at 3,552. On Tesla, we were up just a little bit over 1% today, and Tesla is trying to break out, but it's still finding strong resistance at that 626 level. Remember that Tesla is definitely in a bear market, and it has not been back above the 50 EMA going all the way back through February. We're forming lower highs and lower lows, and we need to see Tesla breaking back above about 634 to start thinking Tesla could go back into a bull market. Because if it does start to break back down below about 594, it could be coming all the way back down to 546. So your critical support levels are 594 and 546, with critical resistance at 626 and 633. On Apple stock, we dropped about 1% today, but Apple is still trying to build up a bullish trend. The price action is still over the 5 EMA, and we did find resistance at that level at 131.8. Apple needs to break back above about 133 to get to the next price target at 135. Your critical downside support is going to be right around 129 and 128, and below 128, we'd be looking for a potential retest of 126. Remember, if Apple is going into a bull market, it's very likely going to stay above 129. So that's the critical support level for the bullish scenario in Apple, and below that, we could be seeing a breakdown. Remember, we still need to see that 20 simple moving average crossing back above the 50 EMA to see Apple going back into a full bull trend. On the financial sector, we see a lot more weakness with the financials getting sold off today, going down 2.4% on increasing volume. The financial sector is definitely looking way too oversold here, and it does have a gap to fill above. So look for a relief rally bounce in the financial sector, but that doesn't mean it can't continue to go lower. As long as the financial sector is below the 50 EMA, we need to be cautious because it could be going into a bear market. On the industrial sector, we also saw selling today on increasing volume going down 1.3%, and we did close below the 50 EMA for the second day in a row. So watch for an oversold bounce, but we need to get back above the 50 EMA to prevent the industrials from going into a bear market. On the healthcare sector, we dropped over 1%, but we did close back above the 20 simple moving average, and we still have a full bull trend. So is the healthcare sector rolling over? It's too soon to say because we're still above the 20 simple moving average. As long as we're in a bull trend and the price action's above the 20 simple, There's no reason to think that the healthcare sector is starting to roll over. On the energy sector, we dropped almost 3% today and we closed right on top of the 50 EMA. We're losing the bullish trend and the price action is now at critical support. If the energy sector continues to drop below the 50 EMA, we could be going into a bear market. So jumping back over to SPY, you can definitely see a lot of the sectors are continuing to look very weak, but also remember we're in that cycle low. That cycle low was right in the middle of June and we just finished quad witching today. So it's completely normal to see a lot of weakness in the stock market during a cycle low, and that's why that cycle analysis was so important to understand. So we see the S&P 500 at critical support at the same exact time that we could be finishing a critical cycle low. So it's not time to get overly bearish, but it's definitely time to be very cautious. As long as SPY is below 420 and 417, we have to acknowledge the fact that the market could be rolling over and trying to die. So be very cautious, protect yourself to the downside, but continue to watch the critical price action. We're losing the bullish trend, but we're still seeing a lot of strength in the tech and growth sectors. Remember, quad witching was always about sector rotation, and I started that conversation early in the week, and I did warn you about this, that we were likely going to see a lot of volatility and a lot of sector rotation. So we're getting out of that sector rotation and we're getting ready for a potential new bull cycle, and we could see renewed winners, and we are likely going to see the winners be different sectors than we had last quarter. So pay attention to where the money's going and stay flexible. Remember, on the Stocks Channel Discord, I'm giving intraday updates and analysis to help you navigate this market, and I'm bringing a ton of brand new trade ideas to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. Happy Friday. I hope you all enjoy your weekends, and I hope you're crushing this market. And as always, I will see you in the next episode.